Can you turn that down, please? Can you turn it down? I'm doing a video. Turn it down. Turn it down. What's going on, guys? Hopefully your weekend was good. We'll wait for a few more minutes and we'll get started. How's everybody doing? Hopefully everybody's weekend was good. You can see I'm in a couple of trades right now. And we'll see how they go. Stops are in profit, so that's good. Let's see if they play out. Just now is a matter of seeing if they play out. Just did my walk and run for the day with my wife, so that's good. A little bit sweaty. Sweaty's good. Sweaty is a good thing. But hopefully everyone had a good weekend. And we'll look at the charts here in a second. Let me just do something real quick. It's getting warm where I'm at. It's good to be spring, summertime, so getting out and getting a little more exercise. I really did think that we would start with a gap up on the US 30 though, because of the news on Friday of good jobs report, and the markets were closed. So I really did believe we were going to have a little bit more of a gap up, but it looks like it didn't do anything really. So we'll start with that one. I have that trade on it right now, and it's up. And we'll just pull up the terminal. Again, we have nothing to hide, right? Nothing to hide here. We just pull up the terminal, see what we got going on. I don't think we're going to need that much space, but so we'll just move these charts up so we can have the live terminal up while we're doing this. What's up? Huh? Oh, yeah, I don't know where it is. All right. What? Yeah, it's charging, I think, in our room. Yeah, that's what. So anyway, so let's pull up the terminal, because it's always nice to have the terminal up while we're trading, right? This has been like this for a while. I don't know why this is doing this. So let's see if we can move this down here, right? Frick. I don't know, that's weird. Why it's not letting me move everything. There we go. Gotta put it back where it's in its parameters here. So you can see everything that's up right now, and we don't need it that big. So move it down a little bit. You can still see everything, right? Yeah, you can still see everything, so that's good. I want to make the charts, be able to make the charts a little bit bigger again. But I was anticipating actually a move up, so the fact that it's going down is a little bit interesting, but that's okay. The stops are in profit on that US 30 trade. As you can see, I'm up 143 points on it. And the stops are at plus 50. So no matter what, I'm going to make 50 bucks on this small account, so that's fine. That's okay. But the area we want to pay attention to is coming up at this 33,256 area, which was previous resistance, now support, right? Once it breaks a resistance area, which it tried to do several times here and never was able to. Once it breaks a resistance area, that resistance area now becomes support. So actually, let's move this maybe down a little bit more. Now you can't see everything if you do that. Okay, so that previous resistance now becomes support. So we could be looking at pulling back down to this 33,256 area for another leg up, or we push down and break below that level and then sell it. So this is going to be a key level right here at 33,256 that we want to see if we either get rejection to buy back up into this range here, or if we go below 33,256. We pull back to there, then we trade down to 33,123 and potentially all the way down into there. The hard part about the buy side is there's not any data to the buy side, right? Because you're at all-time highs. So we either want it to come back down to this 33,256, reject it, and go for another leg up, or we want to see it break below that 33,256 by 40 or 50 points, break below, and then pull back, and then we want to sell. Does that make sense? Can everyone hear me? Can you hear me? I guess I didn't ask if you can hear me. Or am I talking? Can you not hear me? Maybe I'm not. Usually there's one person that says, hey, what's going on? So hopefully you guys can hear me. Hear me or not? Testing, testing. Can anyone hear me? I guess I can go to my own one and see. But oh, you can. Oh, sweet. Okay, I just want to make sure. So does that make sense on the US 30? We want to see it touch down to this area at 33,256, either reject for a buy or break below for a sell. Does that make sense on that, everybody? Then we'll move over to the GJ, because I know a lot of you guys trade that pair, and it spiked down to begin with. So we'll go look at the GJ. We'll mark up a couple areas of significant importance on the GJ as well. And this is on the 1 hour chart, so I'm just marking up a couple of areas of importance of support and resistance, right? And then obviously the resistance line would be up at that top, again up there, right? So right now we're trading in between the range of 152.77 and the high at 153.19. So again, right there is the 152.77 area and the high of 153.19. Those are our significant levels right now. So what we want to see is come back to this 152.77 and reject again, just like we did here. And that's, that maybe that candle lost, and maybe you lost on that one. You should have made a little bit, but we're looking for that candle with a tail longer than the body, right? We would want to see that kind of reject up where it's at now or a little bit low, and then pop back up to the highs. Or it's the same scenario as the US 30. Want to see it break below, pull back, give us the sell signal, and then sell down into 152.29 and maybe possibly down into there. So we want to see it either break below and then break below, pull back, and then sell down to those levels, next red level, next red level. Because people always ask me all the time, well, what's your target? Well, just look at your next support level, right? If you're in a trade and you're saying, well, what's my next support level, or what's my target? Just look at your support levels, right? So my first target, if I were to get that sell, my first target would be here. My second target here, right? And my third target would be down there. Does that make sense? So all you're doing is you're trading those levels, and then your targets are the other red levels. If you're selling, they're the ones down below. If you're buying, they're the ones above, right? If you're buying, and you get the buy here at 152.78, then what's your target? It's going to be the next up at 153.19, right? So if you're buying at 152.77, right there, your target is going to be the red level above there, the next major resistance level. Trading isn't complicated. So when people always ask, well, what's your target? Well, just look at your support and resistance levels. Like, that's the target. Doesn't mean it's going to get there, but that's my target. Because most of the time, right, currencies, they bounce off major support and resistance levels, right? They don't just bounce off like random areas of randomness in no man's land. They usually bounce off, areas of major support and resistance. So when you're trading and you buy at 152.77 right here, for instance, if you do that, your target is the next level. It's really, really not complicated. If you're buying there, right? Your target is the next major resistance level. And people make things way too complicated. Way too complicated. That's easy. Your target is there. Right? Does that make sense to everybody? I would say, does that make sense? But hopefully that makes sense. Again, it's not complicated. And sometimes I think we as traders, we make things way too complicated. Way too complicated. It's not complicated. All right, so that's the GJ. And then on gold, we are pushing up against this level, and we have not been able to break this level that we have been trying to break for a while now at 129. So this level has been a major difficulty to get above right here. So we could see a pullback, right? A pullback on gold to the next level, which would be 1720. And maybe we don't, right? Maybe it just pops through, but we could see a pullback to 1720, give us a buy signal, and then that's the next. Again, people call it liquidity grabbing, call it whatever you want. But if you spend several hours at that area and you're not able to break above, then a lot of times you have to break lower and then pull back, and then the next move is that one that does that, or potentially that, right? So if we don't do that, then the potential is that we move down for a little bit and then make the next leg up. Obviously, we don't have to, right? We could just break this level. So if we break this level, pull back to 1729 and get a buy signal, then we buy it up to 1736 would be our first target, and then 1745 would be our next target. Is this complicated? I just want to make, hey, yeah, what's up? This shouldn't be complicated, right? So if we break above 1729, pull back, get a buy signal, then we buy it up to the next levels there. Is this complicated at all? If we reject this high and we come down to 1720 and we don't get a buy signal at 1720 and it pulls down below 1720, then pulls back, then we can sell it. And what are our targets? You're just going to look for the next major support and support levels, right? Your target might be 1715, and then your target's going to be below that. It's really, really not complicated. All we're doing is we're trading between major levels of support and resistance. Does that sound complicated? Simple as that, yeah. You're looking for the pattern. You're looking to trade the pattern around major support and resistance areas. Simple as that. It's really not hard. And again, it doesn't have to be. People think, oh, it's, I get messages all the time. It can't be that simple. Yes, it can. Why not? Why can't it be? Because in your mind, you don't think it can be that simple? Because it can, right? It doesn't have to be. It can be absolutely simple. But we in our minds don't believe it can be, and that's the problem. That's the problem. Okay? Easy. I always say easy peasy, lemon squeezy. Really not hard. So knowing that I can't trade anything till the opening of the next hour, right? Till the opening of and I don't know why this whole thing is just messed up. It's just messed up. So we're just going to close that for now. Hold on. Hey, Ace, what's going on, man? So, does everyone got it? Everyone know what we're looking to do? So, because we can't do anything till the next hour close, there's not a lot of reason to continue to just goof off, but maybe we'll hang out for a minute. But we just did the analysis, right? And we know what we're looking for. We know the pattern we're looking for. We know where the areas are that we're looking to trade around. So it really should be an easy week. It should be pretty simple. But again, people will make things complicated because in their mind, they don't believe that it can be simple. Right? know what to do. I just took off all the content off it because I'm gonna, as soon as I find out that Rumble has live streaming, I'm gonna be completely off YouTube, because they're censoring people, and I don't like them censoring free speech. I think their censoring is ridiculous. So as soon as I can live stream over on Rumble, I will be closing my YouTube account, because I don't like the way that they censor people that don't agree with their positions. So as soon as I can get away from YouTube, and I'm going to look into Twitch, because everyone's said I should do that, but as soon as I can get away from YouTube, I will be canceling my YouTube, because I don't like the way that they censor people of of one political view, right? Us conservatives, they just censor us. They just totally remove us from all these social media platforms. So I'm just going to remove myself from giving them the time of day, and I'll go over to somewhere else. I just don't like blatant hypocrisy and censorship that YouTube uses. So that's the reason. So I've taken all my content off and stored it somewhere else, and as soon as I can upload everything onto a different platform, I will be doing that. I'm just not going to put up with that. You're not in the, you're supposed to be where people can share their views, no matter what their views are. That's the whole idea of the platform. And when you start censoring just a certain viewpoint because you don't like it, I have a problem with that. Yeah, Machine Gun Benny, we can do that. I mean, obviously it's going to be the same as the other ones, right? But we can look at that. I don't look at those very often anymore, but we can certainly look at them. All you're doing every week, and everyone should be doing this, is you should be going over your major support and resistance levels and trading around those levels, right? So obviously on the Euro USD, there's a major low, and you don't have to have the same exact ones as me, but you want to have some significant areas of support and resistance, right? And you're just going to mark them. Okay, you start marking your charts, and then that kind of gives you an idea of where you want to be. Okay, so those levels are significant levels right now, and we're above 117.61. So we're right in the middle of one, right? We're in the middle of a key level. This is a key level right here at 1761. And the reason it's a key level is because it hit here and it hit here, right? So it's hit that level a couple of times. So now what we want to see how that's a key level? It's hit that level a couple of times where we're at right now. Now what we want to see is we either want to see it break above, right? Machine Gun Benny. We want it just like the analysis before. We want to see it break above, pull back, and then we can buy it up to that next level there. Okay, does that make sense? Or we want to see it reject this level that we're at now and sell down to potentially down to there and down to there. And once I get the signal to do a buy or sell, I'll do it accordingly. But does that make sense? So we either want to break above, pull back to this level, and then we trade it up to there, or we want this level right that we're at to reject, and then we trade it down. If you want to look at the higher time frame trend, so you know which way the trend trade is, the 4 hour is a downtrend, the daily is an uptrend, the weekly is an uptrend, and the monthly is an uptrend. So you have 3 of the 4 higher time frames an uptrend. So if I wanted to trade with the trend, I'd be looking for buys. And again, how I draw the uptrend on these is maybe a little bit different than other people do. I just see where my chart is at the beginning. So on this daily, there's where it started, and here's where it is right now. Is it higher or lower than it was when it started? That's basically how I do it. So right there is when it started. This is the daily, and it's up there right now. So can you go to the other side, please? So that's how I mark it up. Does that make sense? So that's how I say it's an uptrend or a downtrend. I care about the longer term. So I would, if I want to trade with the trend, I'm going to be looking for buys at major support levels. And so then I'll go back down to the 1 hour chart and I'll look for those areas. And right now we're at one of those areas, but I don't want to buy it just because we're at this area. I want it to break above this area by 20 pips or so, pull back to this area, and then buy. Okay, I don't buy breakouts. I wait for a pullback. I want to see it break above and then pull back. Okay, so you say on the GU and EU, I guarantee you with what I just did, you could do the same thing on the GU and say, this is what I want. I either want to, you know what I mean? And we'll go over it, but you should be doing this analysis all the time. All the time, everyone should be doing this at the beginning of the week. What are my major trends? What are my higher time frames saying? You know, I mean, if you're going to make this your full-time job, you need to be doing this kind of analysis every week. And don't do too much, right? Don't overanalyze, because a lot of traders will overanalyze the charts. They'll spend all weekend on charts, get away from the charts during the weekend. I always like this saying, paralysis by analysis. Don't do too much, but when it's game time, right? When it's the week and it's time to roll, you should be doing this kind of analysis all the time. You should be looking for your support and resistance levels. You should be marking your support and resistance levels. And you say, okay, if it comes down here, I do this. If it comes down here. Okay, so there are some significant levels. And again, they don't have to be perfect. They don't have to be exactly the same as mine. But they're significant. So right now you're trading that range, right? On the G, you're trading between 138.11 and the higher range at 138.45. So these are really the only ranges that matter to you right now as a trader. Is this level here at 138.11 and this level here. Right? Those are the only two levels that matter to you as a trader right now until it breaks one of those levels. That's all that matters. Make sense? So does that make sense? That's all you do. You're looking for buys at major support and looking for sells at major resistance. We're not people who buy high and sell high. We're not those people who buy breakouts and hope for, 10 pip scalp trades. We're people that look for buying low and selling high. And again, we talk about this all the time. And I don't know if you've heard that. This might be the first time you've been in here, but in every other aspect of our lives, right? When we go to buy a house, we don't say to the real estate agent, I really like this house, Mr. Real Estate Agent, but I'm going to wait until it goes up 15% before I buy it. Nobody does that. Nobody in their right mind says to the real estate agent, I really like this house, but I want to wait until it goes up 15% before I buy it. No one goes to a car dealer and says, I really like this car, Mr. Salesman, but I'm going to wait till it goes up to buy it. No. We try to buy a house at the lowest point possible. We try to get the best deal on a car. But then when it comes to our trading, we invert that theory. And most people and streamers look to buy high and buy breakouts, and they look to sell, hoping to get a breakout to the low side. Does that make sense? But in every other aspect of our lives, we do the exact opposite. We look to buy low and sell high. And those principles of buy low and sell high have been true for many years before we started trading, will be true many years after we're gone. Buy low and sell high is a true principle that has been true for a lot longer than any of us will have been alive or will ever be alive. But somehow we get it twisted in our minds that we have to buy as the market's going up and sell as the market's going down, and that's completely opposite of what we should be doing. And that's why 90%, 80%, 90% of retail traders lose, because they're doing the wrong thing at the wrong time. Does that make sense? That's why the majority of them lose. They get the direction right. A lot of people get the direction right, but they're just buying or selling at the wrong time or the wrong place. I never buy as the market's going up, and I never sell as the market's going down. Does that make sense? But a lot of people will sell as the market's going down. And if you're selling as the market's going down, you've already missed. The move is gone. And if you're buying the top, hoping for a breakout, you've missed it. The people that pushed the trade up, they didn't buy where you were buying, right? They didn't buy at major resistance levels hoping for a break above it. They bought below there. And one of these is a perfect example of it, right? This is the GU. You have this level right here that's significant. and then you have it touch up here. All right, those two areas right there, I mean, that level is significant. And then you have it do it again there, and there's a lot of traders that will buy the break of that. And what happens to them? What happens to the traders here if they would have done that? If they would have bought the break of that resistance levels, what happened to them? They got suckered. They did exactly what the big boys or the market makers, they did exactly what they wanted them to do. They bought a break and they got their lunch handed to them, because the majority of breakouts are false breakouts, right? So this one you would have bought, and then you would have got up maybe a pip or two, then you're gone. Then it's gone. No, I don't know. I don't believe in that. I don't. What are you doing? Just, Adeline, just get something and open it. What are you doing? Just get something. You know how to open it. Anyway, so I don't believe in that, I guess I would say. I believe in patterns, right? I believe in patterns and they repeat themselves, but I don't necessarily believe in that on certain days. No, I would have to study it more. I don't believe it right now because I haven't studied it. I'm a person that likes numbers, and if you can prove to me that stats say that that's the way it goes, then I probably would believe it. But I haven't studied it enough, I guess, to. I just know what patterns work and what patterns don't work, and at that point, like we talk about all the time, you're just a robot, right? If we know that the patterns are accurate 85% of the time, at that point, you're just a robot. Just a robot. It doesn't matter. Every time the pattern forms, you do it because the numbers say to do it. And it doesn't matter what else is going on in the markets. If you know you're going to be right 85% of the time and the pattern forms, you take the trade. Right? It does not matter. There's nothing else that matters. And the reason we do that analysis that we do all the time with the circles is because if we can prove over a long period of time that we're right 85% of the time is usually what it is. Sometimes for the week it's 90, sometimes it's 70, but on average it's about 85% overall. Then it's a no-brainer. It's you're a robot at that point. Oh, I see the pattern, I take the trade. I take the trade. And someone sent me a message today because they're like, hey, on Bitcoin, I took two trades, and maybe we'll go look at Bitcoin. I took two trades, and the pattern was there to the buy side, and I lost. Can you help me on it? I said, losses are part of the game. And he writes back and he goes, man, what great analysis. I'm like, well, what more do you want? I mean, unfortunately, there's nothing more I can tell you. Losses happen. But I know over the long run, it's going to be right 85% of the time. But if you just took two losses because you took the pattern on Bitcoin and it lost, then move on. The numbers are the numbers, man. It'll still work, right? So if you lost, you lost. But I'm looking at it now, and I don't see how over the last several hours. I mean, there's an example right there. There's an example right there, and there's several other examples. I don't see how you possibly could have lost on Bitcoin just following the pattern. Oh, you would have lost. I guess you would have lost this. Maybe lost this one right here. Oh, and this one. So maybe these are the two that. Anytime. Well, I don't consider it on any time frame less than the 1 hour, but people in my group traded off the 30-minute and 15-minute do great. I don't do it on any time frame less than 1 hour, but it works the same on any time frame. So I think he probably lost on these two right here, and then was like, well, I lost a couple, and that's fine. Like I said, losses are part of trading. But if you would have taken this one here, you would have been fine. And then the last four, you would have been fine. But there were two there that lost, and that's fine. But he was looking for this big explanation of, well, why did I lose? Because losses happen. I mean, I don't know why it needs to be more. You know what I mean? So it was interesting because he's just like, well, I think he was looking for a little bit more in depth, and I'm just like, nope, pretty clear, pretty easy. And it really is. It's not any more complicated than that. Sometimes you're gonna lose. I don't usually trade it either, but on the weekends, I guess I get bored sometimes, and on the weekend you want to trade something, so you look at Bitcoin. I did it last. I didn't do it at all this weekend, I don't think, but last weekend I did a little bit of it. But really, there isn't any other explanation, right? Sometimes you're just going to lose, and losses happen. They're a part of trading, and it shouldn't affect you. And I tell people all the time, and we can talk about this because we have 22 minutes before we can even take a trade. Then after that, we'll see if we can take a trade here in 22 minutes. If not, I'm going to call it a night for this stream. But losses happen, and I know that the pattern is going to work, so I trade the pattern. If I lose, I lose. That's okay. I'm not afraid to lose, and I tell people all the time that I started becoming extremely successful trading when my emotions were the same, whether I won or lost. Does that make sense to everybody? I can win a trade or lose a trade. My emotions are going to be the same, and when you can get to that point, you'll be successful if you have a basic knowledge of trends and support and resistance, and you trade around support and resistance, and you trade the trend. You really don't need anything else, and then you feel emotionally, you'll just have the same emotions whether you win or lose. That's when you'll start becoming extremely successful. Because again, it's our emotions usually that get the best of us, and why we don't become successful traders is because of emotions, nothing else. It's not usually our analysis per se. It's that our emotions get in the way of trading. And that's why I don't, and I'm just saying this because this is what I believe in, I don't like trading with 10 pip stop losses, because a 10 pip stop loss to me is just market noise, right? So I don't want to get knocked out of a trade that I've spent time on with a 10 pip stop loss, because that's just market noise, and one little deviation in the market can knock you out. So I like to look at get out of the forest a little bit and look at the trees a little bit further and have a broader perspective of things. And that's why I trade with deeper stop losses, because I just don't want one little anomaly in the market to knock me out. So I look more long term when I'm trading, and not just a quick 10, 10, 10, So it's just a different way of looking at things. Doesn't mean you can't be successful doing it that way, but it's extreme. I feel like it's extremely difficult to duplicate that. Right? For instance, if you're going for 10 pips and you're listening to somebody, you have to get the same entry and have the same spread, or your results are going to be different, right? Like, unless you have the exact same spread, you get in at the exact same time, they might get to 10 pips and you might only be at 7, and then it turns around and goes in the opposite direction. They got their 10, you never got it. You know what I mean? You never got to 10, you only got to 7, and then it comes out and stops you out. So for me, you have to be extremely accurate, and you have to get in at the same time and have the same spread for it to be duplicatable to me. I like this better because I don't have to be. I don't have to. That with I mean, if he can do that, great. Like I said, good for him. Hats off to him. But that's insane. I mean, to me, that's insane. But then they say, Clay, will you trade? When you trade the US 30, you trade with a 200-point stop loss. Well, yeah, again, but I'm also looking for 400, 600 points winners. So I guess, like we always say, as long as your risk to reward is 2 to 1 or 3 to 1, what does it matter? I guess. And they'd say the same thing to me, but a 200-point stop loss with a 400 pip take profit is the same as a 5 pip stop loss with a 10 pip take profit. It's still 2 to 1 or 1 to 2, whatever you want to say, right? What's the difference? There is none, right? There's no difference. If I trade a 200-point stop loss and I have a 400-point take profit, it's still 2 to 1 or 1 to 2, however you want to call it. It's the same thing as having a 5 pip and a 10 pip stop loss, or a 10 pip take profit, a 5 pip stop loss. It's all the same. It's all relative. But when you're trading the higher time frames, you definitely have to have deeper stops, right? Especially if you're trading the US 30. The US 30 is the beast of all beasts. And I just found that having a 200-point stop loss was the best stop loss to have on that pair. And I've had times when I've been down 160, 170 points, and then it turns all the way around and goes in my favor. So I just found that to be the best for me. And when people start trading like me, they're like, "Man, that's crazy." But after a while, it's just nothing. But again, as long as your risk to reward is the same, it doesn't matter. Again, if you want to do a 5 pip stop loss and a 10 pip take profit, that's fine. That's up to you. But just as long as your risk to reward is good. I mean, you can be right 4 out of 10 times with pressing 2-to-1 risk reward. Be right 4 out of 10 times and make money. So there's two philosophies to that. You either have a really high winning percentage, or you're a 2-to-1 or 3-to-1 risk to reward person, or you can have lower than that. You can have a 1-to-1 risk to reward, or maybe even lower than that. But then your system, you have to have extremely high win rates. Does that make sense? So there's two separate things there. You can go really high win percentage and then your risk to reward isn't as important, or you can go the opposite and say, I'm going to make sure that I get 2-to-1 every time. And it's up to you. I think mine actually goes the other way, where it's because I have a 200-point stop loss on the US 30, but I always place stops at break even at 40 to 50. And some people are like, well, you just place your stop at break even, but you have a 200. I'm like, but I win 85% of the time. 85% of the time, I'm going to get more than 40 to 50. So it doesn't matter. I can take 2 or 3. I can take 2 losses on the US 30 at 200 and still be okay, because I know that. Anyways, so you either have a high winning percentage or you have a really good risk to reward, and that's two different strategies or theories. I guess I lean more towards I know I'm going to be right 85% of the time, so I don't really care. And I know that throws some people for a loop, and they're like, oh my gosh, I can't believe you say that. I can't believe I say a lot of the things I say. So I guess there's that too. So anyways, we'll wait for another 15 minutes or so. If you guys have any questions, let me know. We'll wait for another 15 minutes. If we don't get anything that looks like a setup, then we'll wrap it up for the day. Call it a day. I was going to say I should go take a nap, but I'm not going to take a nap when it's 5 o'clock at night. That doesn't make any sense. Unless I want to be up all night. Maybe I do want to be up all night, though. You never know. Maybe I do want to be up for the London session. You never know. Maybe I do. It's hard to say. So like I said, we'll wait for about 15 more minutes. If we don't get a setup in the next 15 minutes, then we will close down for the day and go enjoy the fam some more and be back for New York session tomorrow. But the other nice thing about trading this way too for me is if I know that I'm not going to be taking a trade, like if I don't get a trade at that 1 hour candle close, I can go do other stuff till the close of the next 1 hour candle, because I know that I'm not going to take a trade during that hour. So if I don't get one at the close of 1 hour, then I can just wait till the next close of the 1 hour, because I'm not going to do it unless I get it. So it allows me to go do other stuff during that 59-minute time frame that I know I'm not going to take a trade. If that makes sense. But maybe we'll get a setup right now. You never know. Looking at a couple things right now, seeing if anything's setting up. Gold looks like it's possible that we could get a setup. But in order to have a setup, we need to have what? If we're going to get a setup on gold, what do we have to have? We have to have that tail longer than the body of the candle, right? That tail, in order to buy it, we'd have to have that tail close in 14 minutes with it longer than the body of the candle. I look at fundamentals as far as I always have them in the back of my mind. What's going on, Machine Gun Benny, if that makes sense? I always have them in the back of my mind, and I do the research on them because, again, I'm a full-time trader. It's my job, right, to understand everything, to to have a knowledge of everything. But do I say, okay, I can't take a trade because this is happening or that's happening? No. But I always have it in the back of my mind, if that makes sense. And I'm aware of what's going on in regards to fundamentals, but I'm a technical person, 99% technical. But you want to pay attention to the fundamentals, right? But very rarely, maybe during non-farm payroll, I might not do something because of that, or because of that announcement or stuff. But it's your job if you want to be a full-time trader to understand both the fundamentals and the technicals, right? That's your job. Just like going to a job if you're an accountant, going to a job if you're a banker, you have to know all of it in order to be good at it, right? But I lean more towards the technical side of things. And that's just me. That's what I do. I hope that makes sense. I hope that explained it for you. I'll be right back, guys. So anyway, sorry guys, I'm trying to get some stuff set up for my son as well. So yeah, there could be a couple things setting up here, and we'll keep an eye on it. 10 more minutes left to go, guys. So if you need to take a break for 10 minutes, go take a break and come back in 10 minutes. But I'm definitely not going to be doing anything until this candle closes. And then if we can't get anything, we'll just call it a day. Call it a day. See, trading doesn't have to be complicated. Definitely doesn't have to be complicated. You just look to trade around those major support and resistance levels. You look to trade the pattern. If you don't get it, you move on and you wait till the next candle. If you don't get it, you wait till the next one. It's really not complicated. People make things way too complicated. Oh, this or this, RSI or Fibonacci's or this, which have nothing to do with trading. I mean, they do, but you'll never see those on my charts because I don't need lagging indicators to tell me what I can figure out without the need for silly, and I do mean silly, and I mean that, silly indicators. Because to me, they're just lagging, silly indicators, and I don't need them. I can look at a chart and know what I want to do, or what the trend is, or what this or that is, without looking at silly indicators. If they're successful for you, fine, but you'll never see them on my chart. I tell people all the time I'd rather get kicked in the balls than put silly indicators on my chart. Because a lot of times, if, again, like we said earlier, if you're waiting for an indicator to tell you what direction you need to trade, then most likely that trade is already gone and that move has already happened, because it takes a while, because they're lagging. So it takes a while for them to catch up to what the current price action is doing. And if you're waiting for that, then a lot of times you've missed it. And if you understand how to read charts and you understand the signs that are left in the charts all the time by the professional or people who move the markets, you understand what to look for. You don't need those, because they leave signs. They absolutely leave signs. And if you know what to look for with the signs that they're leaving, you don't need those goofy, silly indicators. And I do mean goofy and silly. Because to me, they're a waste of time. But if someone else likes them and wants to trade with them and think they make money over the long run, good for them. Hats off to them. I don't believe that's the case, but if that's what they think and they can do it, then great. Be my guest. You'll never see them on my charts. Ever. Never, ever, ever gonna see them on my charts. Because I don't need them. I also don't ride the short bus. But that's okay. That's kind of mean, right? We shouldn't say that. It's not good. Yeah, it does. Starting to look like we probably won't get a signal right now, but we are about 6 minutes away. Oh, maybe we'll get a signal on the NAS, actually. The NAS looks like it might be giving us a signal, so we'll pay attention to that. So if I forget to look at that in 5 minutes, then let me know, because we might get a signal to sell the NAS. The other one I was going to look at is the Pound Aussie, and we don't have anything on that. So another one we can look at that I don't, well, you know what, oil's not even going to be open for a while, so we're going to get rid of the oil chart, and we're going to put the NAS up there right now, because that's one we're interested in, and looks like it possibly could give us a signal here shortly. So we'll take the oil chart off and we'll replace it with the NAS chart for now. And we'll see if in 6 minutes, but the way it's looking right now, that would definitely be a potential sell on the NAS. And why is it a sell on the NAS? Anybody that's here, we'll pull up the chart. Why would it be a sell on the NAS? The NASDAQ 100. Why would it be a sell? Bueller. Why would it be a sell? Anybody? Bueller. Ferris Bueller. Why is it a sell? Now we're being interactive. Maybe people don't like it when you ask them questions, right? Now we're asking you to be interactive. Why would it be a sell? Perfect. Yep. Bingo. Winner, winner, chicken dinner. It's Easter, so winner, winner, chicken dinner. That's probably not the best. But you're right. The wick at the top would be longer than the body of the candle. And if we know that 85% of the time we will win, and 15 to 20% of the time we'll lose, then do we take the trade? If we get the pattern at the end of this 4 minutes, and we know we're going to be right most of the time, 85% of the time, some weeks it's 75, but no less than that usually. But if we're going to be right, let's just say 80% of the time, do we take the trade? Do we take the trade? Now you don't want to tail at the bottom or very little tail, so it's starting to form a little bit of a tail too, and I don't want that. But if it closes with a wick at the top with no tail or very little tail, then do we want to take it? Of course we do. But right now it looks like it's kind of more of an indecision. I'm almost done. I'm not done yet. Okay. Right. So yeah, you're exactly right. Okay. So that's what we're looking for. Obviously, you have to make up your mind too. If it has a little bit of a tail on it, you have to make up your mind if it's worth it. Sometimes I'll do it with a little bit of a tail, but I like it to have neither tail or wick. So this one would be, for me, wouldn't be one right now because I don't want that tail at the bottom. Does that make sense to everybody? What we're trying to get done and what we're trying to accomplish, does that make sense to everyone? Before I go, I want to make sure that it makes sense to everybody. The things that we're trying to do and trying to accomplish and what we're looking for. Make sense? So this one, if it closed like this, would be, I mean, I don't know, it would be a, I mean, if it can come down a little bit lower, then it would definitely, but it looks like it's going to close with both a tail and a wick. And so this one would be, you have to decide if you want to do it. I am not going to unless it closes with no tail at the bottom. So one more minute. If we don't have anything, which it doesn't look like, then we'll end the stream for the day. And we'll see you guys again in New York. And it doesn't look like anything is going to play out. Oh, it's trying though, isn't it? Look at that. If it drops a little bit more, it would definitely. Oh, look at it. It's trying. It's trying. Drop a little bit freaking more. I mean, I would like to take the trade for the reasons that it's at a significant high level. So it's going to be, yeah, it looks like it's going to be good to go. So I'm going to take it. Got a little bit longer here. Okay, there we go. I'm going to take it. I'm not going to do a very big one, but I am going to do it. Okay, so let's just review the other thing we're trying to do here. Okay, we're going to take that NAS one. Now we have to figure out what our stop loss is, right? And mine are obviously a little bit different than some people's. So we know that it made that high at 13,406. I'm a trader that likes to keep my stop loss above or below the support and resistance. So I know that this one, I'm going to have a pretty deep stop, right? Because my stop needs to be above 13,406 to keep it. And then my target levels need to be somewhere down in here. So at 13, maybe 186 or something like that. So my stop loss is going to be, I guess, 100 points. It's going to be 13,440 because I want to keep it above that swing high. Okay, so I'm going to go view terminal. Now I got to move this a little bit. And I got to set my stop on this. So I want to go 100 above where it was. And if I get stopped out, that's okay. Remember, I'm trading bigger stop losses, but I'm also targeting bigger areas as well. Right? So I have bigger stop losses, but I'm targeting bigger areas. Okay? Does that make sense to everybody? What we're doing? And I guess you guys can check back later to see if I was an idiot or not, because I am done for the day. Done streaming for the day. So I guess you guys can check back later to see if I was an idiot. But my stop will be below there, and my take profit area will be at least 200, which would line up with this level down there. So it's either going to go 100 against me or at least 200 for me. All right. All right. We'll talk to you guys later.